Hey everyone, John right here, slingshotfutures.com. Today we're going to be talking about the indicators that I use to trade. Now, normally I would have my face on the screen and all that, but I don't want to bog the screen down with any more because, well, we're going to be covering a couple different things, and I want to make sure we have as much room as possible. So some of you are probably thankful for that, but generally speaking, when I'm looking at the indicators, they need to bring value to the table, right? First of all, my stance on indicators is I don't really like them. I'm not a huge fan of indicators. I think they clog up things. They make trading decisions even more difficult because you have to filter through a bunch of other things. And frankly, indicators are lagging by nature, right? The reason they're lagging is because they require price to create the calculations. Well, if you know how to read price action, you don't really need the indicator because you can probably guess what's already there in the first place. Now, looking at the price chart, that's my primary emphasis. For me personally, I use a moving average. This is a 21-period moving average. There's nothing fancy about it. It's just a standard moving average. And the main reason that I utilize a moving average in the first place isn't necessarily because, oh, I need to take trades off the moving average or anything like that. It's mainly just a visual crutch, if anything. I already know that the price action is trending higher. In this case, it's obviously bullish. But having a moving average on your side and showing that price is above said moving average just visually makes it a little bit faster. You can kind of equate this to something like the Ichimoku cloud, if you're familiar with that, where it's designed to be at a glance. I look at it, it's above, okay, perfect, that's all I need to think about. When I'm taking trades, do I use the moving average as a key behind my trading decisions? No, not really. The key behind my trading decisions comes from the market context. You know, what's the market doing and do I have a reason to get in, etc. Moving averages, again, mostly just a visual crutch. But it is one that I use and one that you will find in my chart very frequently. Now, a list of moving averages that I do find beneficial for those who maybe need a little bit more than just a single one. Some that are very common would be the 21. You also have the other common ones. Fibonacci ratios tend to be used quite frequently. A 55-period moving average, an 89-period moving average, and then of course the big hoss 200. Pretty much everybody uses a 200 moving average at some point in their life. And it kind of creates a self-fulfilling prophecy. So many people are watching it at the same time that when it gets to that area, it tends to react. Well, that would be why, because everybody's watching it. Another one that is kind of interesting is a 365, right? A full year. A 365-period moving average. But in reality, does the moving average value really matter? No. Right? Again, it's all derived from price. If you were to show me a moving average that works at all times, first of all, I'll give you a clue, it doesn't. There is no such thing. But I can show you a randomly generated moving average number that will work equally as well. Because it's an average, right? That's the whole design of a moving average, is it's an average price over X amount of bars. Now, you do have the question of, simple moving average, weighted moving average, exponential moving average, etc. I prefer EMAs because they tend to be a little bit more responsive to forward price, and that's kind of where I like trading, on the white space on the right side of the screen rather than backtesting and historical and all of that fun stuff. My HINDSIGHT trading account is in the trillions, but I tell you what, when you need to look forward a little bit, I like something that's a little bit more weighted towards the front. Now, to further my example here on the moving average topic, let's take a completely blank chart and we'll throw up a completely random number just as an example. All right, so we have a completely blank chart, and what we're going to do is go on over to Google and have them create a random number between 20 and 1,000, right? Now, 20 just because, 20-period moving average is the lowest one I use. You could start with 1, but a 1-period moving average isn't going to help a whole lot. So 583, and just so you can see it's completely random, I'll generate it a couple more times. 149, 246, 873. Okay, never heard of anyone using an 873-period moving average. So an 873, that's the one that we're going to load up, right? So let's go into the indicator list. Go down to a simple moving average. We'll start with the easiest ones first. And I just totally forgot the number. Was it 873, I believe? 873. So a simple moving average, 873 period. And let's zoom way, way out. Oh, let me get rid of my global drawing objects here. And let's look, right? Now, I don't know about you, but when I look at an 873 period moving average, that looks pretty darn good, doesn't it? We have a nice little bounce and a breakaway move. We have beautiful support, beautiful support, beautiful support, nice support. I mean, you get the idea. This is a completely randomly generated number. Has nothing to do with what price is doing. It's an average, okay? Let that sink in. Doesn't matter what number you use. Everybody always gets tied up. What moving average number do you use? I don't care. Use a fast, a medium, and a slow. Just keep it at that, right? Whatever your fast period is, doesn't matter. Whatever your medium period is, doesn't matter. Whatever your slow one is, doesn't matter, as long as they're staggered in that sense. You got a fast, a fastest, a medium, a slowest. You get the idea. So in terms of moving averages, I really don't care what it is. It's always going to work because it's an average. That's how they work. Now, other indicators that I use, going into some of the other interesting things that you might see on my chart, lots of horizontal lines back and forth. All those are monthly, weekly, and daily levels. That's it, right? So if I go into my indicator list, you'll see them right there. You have the prior day, open, high, low, close. You have the prior week, open, high, low, close. Prior month, open, high, low, close. That's all those levels are. There's nothing fancy about it. Some of the other ones that I will utilize as something of interest would be wanting to, what I like to call quality of life indicators, if you will. The GOM label horizontal lines. Now, one thing that you will find from me, I don't utilize any proprietary indicators. I hate proprietary indicators because that closes the door on traders. I want everybody to be able to trade the way that we're trading, and I want them to not have to deal with, oh, well, you got to buy XYZ indicator to make it work. No. What you are going to find, though, is a lot of quality of life indicators. The GOM label horizontal lines indicator is phenomenal for that because what it does is it labels the horizontal lines. So if I put a line on my chart, this little price box right there, that shows up on the screen. That's from that indicator. So I don't have to sit there looking at it and squinting saying, oh, is that 89 or maybe that's 64.90? No, I know what it is because the indicator put it on there. Another one is the BT opening range, another one that is freely available from the NinjaTrader forums, which is where you're going to find most of these, that is a bracket. It's a way that you can lock off a specific time of day or a specific range of time. Now, one of the very common things, if you look over on the S&P, is finding a opening range of 30 minutes to an hour. That's a very common time frame to keep an eye on. In this case, you can see on the S&P chart, we have a 30-minute, but I also like keeping an eye on the first 5 minutes. Now again, do I utilize these for trading decisions? No. This is another visual crutch, just like the moving average. Are we above that range? Yes, then we're probably bullish. Are we below it? Then we're probably bearish. Will I shy away from taking a short if we're above it? Absolutely not. It all comes down to market context. So as you'll find very quickly, I don't put any of my trading decisions on indicators themselves. It's always from market context because that's where the good information is. In terms of stochastics and MACD and all of the other stuff, they have their purposes. If you're more of a very specific, this, and this has to happen, then I place this trade, kind of systems trading, sure, they'll fit into that. And then you have a lot of other things you have to deal with. I don't generally use them. Again, I don't really need to use them because price action is giving me that idea or the clue that it's happening in the first place. Like right here on the S&P as an example, when we look on these highs and we see a very strong bear push to the downside, very likely you're going to find something of a divergence on a faster moving type of indicator, like a stochastic. A MACD, maybe we'll pick up on a divergence there, but probably going to be a stochastic. Now again, if we go back to our blank chart here, do I still have it open? I might have closed it. All right. So let's load up the S&P on a blank chart, and we'll do it again, but this time around with a stochastic indicator. So again, we can kind of go and prove the point that indicators are relatively unnecessary. Let's go into the indicators, and we'll load up a stochastic indicator. Nothing fancy, whatever the base default one that I have in here, 393, okay, whatever. Let's load that up, and hey, what do you know? You have a divergence on the highs. Do I need the indicator to tell me that? No, it's obvious, right? They put in a high and price dropped lower. Probably going to find sellers that follow through up here to try to drive the market down. Now, one thing that I will give the stochastic indicator, will it have told me sooner than me doing it visually? Yes. But will that have an impact on a trade that I take? No, because I'm still not going to short unless I have a reason to. So that's the thing with indicators. They become largely useless once you realize how price moves. The same goes with a low for a MACD, right? This is a really wide one, so a stochastic might not be able to pick up on that. You'll need a slightly slower indicator. These are going to be the MACD divergences instead. So if we go into the indicators again, let's look at a MACD. Right there, MACD. And hey, what do you know? We have a MACD divergence. It doesn't take a rocket scientist to figure this stuff out because it's obvious, right? Now, why is this one obvious? Well, we had a big exhaustive blow-off, a pause, and a very strong retaliatory lift. probably going to find divergence there, right? I don't need the indicator to tell me that. So when you look at my charts, they look pretty empty. And there's a reason for that. A lot of the indicators are unnecessary. You don't need them if you know how to trade price action and you understand how price action moves. Now, that said, with indicators, if you're still learning the price action side of things, you know, whether you're a member, you're not a member, it doesn't matter. When you're in the learning phases, that's where utilizing indicators may become handy because you're not at that point yet. You don't understand quite fully how price action works, and those indicators can give you some pretty big clues. So it's not a complete shun. I don't hate indicators in the sense that you should never use them. They definitely have their place. But when you're looking at the indicators after you developed your personal system or strategy or approach to the markets, whether it's one that we teach here at Slingshot or not, you'll find pretty quickly that a lot of times the indicators are kind of an afterthought. You look at the trade setup, you see the trade setup, you know that setup because you've traded a million times. Oh yeah, by the way, there's indicators, right? Let me double check really fast, but you already know the setup is there. So when I'm using indicators, the indicators that you see on my screen are mostly just quality of life indicators. They make my life easier. The numbers underneath the bars are a great example. Why do I use those? Would I use those if I traded alone? No. But I run my live trade room, and it makes it a lot easier to give a reference point. Say, hey, you know, bar 14 on the S&P looks pretty interesting. Without anybody even having to look at the screen, they can see exactly what I'm talking about. So, again, a lot of quality of life indicators. Are they necessary? No. Can you use them? Sure, if they fit your trading style. So, an overview of the indicators that I utilize my very favorite ones would be a daily, weekly, and monthly open, high, low, close. Right? Those are the ones, those horizontal lines that you see on the screen by thickness are dependent on how far out they go, right? A really thick line, probably a monthly level. Aside from that, quality of life indicators, right? Quality of life indicators, things that make your life easier. Putting a label on a horizontal line, that kind of thing. That's really all you're going to find. A bar timer in the bottom corner. That way I know when the candle closes. That's really it. So when you're looking at your indicator list and when you're looking at your chart, kind of look at it and say, do I really need all this? Or can I make it a little bit simpler on myself and find an alternative that might be less decision-making intensive and more price action oriented so you're getting a feel for the market? Something to think about. That's going to do it for this one, though. Hopefully you found it interesting, useful, and maybe something that you might want to take a look at and consider on your own trading charts. Aside from that, though, that's going to do it for today. As always, if you have any questions about it, feel free to send me an email, jbrink@slingshotfutures.com. Until the next time, we will see you all later.